You know, Jared, I'm looking out at 8th Avenue in New York City, and I never in my lifetime thought I'd see it this quiet, this calming, this eerie, right? And that's a good thing because that means people are heeding advice from medical experts around the world to stay home and stay put. I mean, this is a personal, it's both a personal and a global pandemic, right? It's rapidly, the world we live in is rapidly uncertain. It's changing every day, constant discussions about, working from home, dealing with the different dynamics. How do we prepare for this new life that is, rapidly changing our day-to-day existence? And I think, one of the questions, just to kind of kick off the show, I know you're following local media very, very closely, is really what should people begin to anticipate in terms of being home for? I mean, Dr. Fauci, who's been maybe the face of this from the National Institute of Allergy and Infectious Diseases, and he's been a member of the White House Coronavirus Task Force, which we've seen providing their daily reports during White House press conferences, saying that no matter what, you're always behind where you think you are. And if you think that today reflects where you really are, well, we got a long way to go to flatten this curve. So what's your perspective on what you're hearing and seeing on staying home?
Yeah, absolutely, Jason. So, there's obviously multiple things at play here. Like you said, these are unprecedented times. I mean, most people would never imagine something like this happening in their lifetimes, right? So this is history. And there's really not much in terms of prior history to go off of in terms of what's going to happen here. I mean, these are really unprecedented times, but there's a few crises that are playing out. One is obviously the health crisis, and it's turning into an economic crisis as well. So obviously we have, a lot of hold up in Washington in terms of how to handle that. And that's obviously affecting things. But in terms of how long this is going to play out, it seems like it's going to be a matter of months, not weeks. So, if you just follow what's happening in the mainstream, for instance, the sporting events being canceled on practically every entertainment venue has been shut down completely. But if you just look, the Olympics have been postponed, and that was for months from now, right? So PGA Tour canceled their first two biggest events of the year. The NBA season shut down. Follow the money, So if those big entities are basically anticipating we're going to shut down and lose all that revenue and all the sister and small businesses that feed off of that revenue who are going to be impacted, you got to anticipate that this is going to be a matter of months. And I know Trump said he had some high hopes, and the administration is saying, I would like to get things back to normal and people start working by Easter was his message. And, you got to be able to, the way I look at it is I try to see through things, and not just take what somebody is saying as an emotional reaction that's going to happen within me where I'm going to get charged by what somebody says. I mean, a lot of what happened in that press conference, for instance, was to buoy up the stock market, right? So he's thinking about re-election. The economy has been tanking for a historic week and a half as it is right now. So, he wants to show people that they're making an effort to actually get things back in order, but it's a very unrealistic timeline. That's going to be Easter, and he's not as dumb as the media paints him out to be. I mean, he knows that it's going to be months, and there's a lot of other stuff that are going on right now, and people understand the parlor tricks that the media plays. You can kind of see that there are a lot of other things going on right now that aren't necessarily hitting the mainstream news, and the virus is to be taken, 100% seriously. It's real. It has a higher contagion rate than other viruses. So people, you see a lot of conspiracy theories out there on the internet or whatnot about they don't know anybody who's contracted the coronavirus, and they're not so sure. Why are they shutting down the entire country and the world essentially because of something that has fewer deaths than a lot of other serious issues we face: cancer, heart disease, automobile accidents, even the flu, right? So there's a lot of conflicting information out there and so forth. But the reality is it's a higher contagion rate, it's a higher mortality rate, and the hospitals are overwhelmed. And they don't want to get into a situation where if it were to hit all at once, like the flu, there's no way the hospitals can take care of everybody, especially with the limited number of respirators that we have on hand. I think that there's only 70,000 in the country, and they're looking to ramp up production or get them from other places to be able to handle it. But, that's the major reason for the slowdown and the shutdown. But what it's turning into is an absolute all-out economic crisis as well. And there needs to be an attendance to that, obviously. And I don't think the stimulus package is going to correct all of it. So we'll see. What are your thoughts on everything, Jason?
Well, it's interesting. You mentioned talking about buoying the economy. We're going to address that a little later, both fiscally, from a fiscal and monetary standpoint. We'll talk about that more later in the program. But today, people, right, you talk about the stock market and clearly rapid fluctuations. I think we've just seen the first day since early February, I think, with back-to-back gains for the Dow Jones Industrial Average. And people are focusing, especially if you look at the under 40 demographic, Jaret, right? That maybe are trying to prioritize their day. Now they're home, they're stuck in front of their computers. A lot of them are now looking at day trading. They've never lived through a crisis situation like this. They might have some cash on hand and they want to put it to use in the market and don't necessarily have time to read through annual reports and 10K statements and things of that nature. Your background's spent a lot of time in health and fitness and wellness. Obviously, hopefully most people are able to retain their jobs or have some type of unemployment contingency that's in place right now. And certainly there's a major move from a lot of content providers and streaming services that are out there that provide joy to people in these downtimes. And there's things you can learn, right? This is a really unique opportunity to kind of make the most of it while you're home and you have free time to engage and get a better understanding. And I'd like to know from you, I mean, for me personally, I've always been a big yoga fan. And there's tons. Actually, the studio down the street from my house, I'm continuing. They actually switched from live classes to streaming right now. And they're a small business and we want to do whatever we can to support them. So I'm still able to take courses with them, but they have a lot of different, you can see there's apps, Yoga Studio, Daily Yoga, FitStar Yoga, things of that nature that you can do to stay active. So clearly apps play a big role, and there's companies like Peloton and Proform to keep your health and wellness. And there's talents like learning languages, using Open University to study things that you may never have had the opportunity, whether it's electrical engineering or learning a little bit about coding, looking at other ventures, nonprofits. So, it could go in a lot of different ways. So I guess looking at that broad dynamic, what are you seeing and recommendation first around health and wellness, how people can stay well? Because I think that's priority number one right now. You got to take care of your health. And I'd love to hear your ideas about what they can do in their homes to stay fit, especially if they don't have the ability to have weights. Most states close down gyms, right? So there's no social interaction and ability to go there. So what are you thinking around focuses for individuals in their homes to stay healthy and well, mentally and physically?
Yeah, absolutely. So, I mean, obviously health is obviously really important. And you want to have a strong immune system, and exercise and nutrition is going to play a huge role in that. There's also some over-the-counter stuff, but, definitely we preach a lot of the times, olive oil, things like garlic, a lot of antioxidants to boost up your immune system. So the nutrition, eat a lot of, despite what's going on with vegan movements and so forth, meat, actually there's a lot of studies that how it boosts your immune system and gives you a lot of vitamins that you need. And there's been some studies that people who are most prone to catching respiratory infections or vitamin A deficiencies and low glutathione. So, you get a lot of that through beef and eggs and Brazil nuts and almonds, and cruciferous vegetables like broccoli, cauliflower. So keep that up. And then in terms of, now everybody has time, so they can't make the excuse I don't have time, right? So like you said, yoga, Peloton, if you have the luxury of that. I don't know what the next coming weeks or months are going to be in terms of if there's a potential lockdown completely where you're not allowed outside. But, in most states and counties and so forth, that hasn't been instituted where you could go out for a run. You could get some exercise outside. If you're confined to your house, it's time to do a lot of push-ups, and if you could do dips and use things around your house, whether that's a chair, whether that's boxes of clothes that you put up, and you could do all kinds of, weight-based exercises based on the things in your home right now. But yeah, running in place is good. If you have a stationary bike, jumping rope, doing like high knees and stuff in place. But that, make an effort to do about 30 minutes to 60 minutes a day of some kind of form of exercise, just so you don't go stir crazy either, besides the health aspect. So, but yeah, a lot of stuff to be able to focus on, whether it's like you said, learning a new skill, how to code, because coming out of this, people do have to expect that they might be laid off, their businesses might not be around. And so if you could start developing that skill right now so that you could go into something where they are going to be hiring, that's going to be beneficial to you.
It's funny, Jaret. I never thought in my lifetime that I would have a struggle to find dumbbells or TRX bands or pull-up bars. I mean, Amazon was completely back ordered, I think, a month on the pull-up bar I wanted to get. All of the stock around the New York City area, I've called 8 or 9 stores, nothing. Obviously, they closed the gym downstairs. Actually, we got a note that somebody or some people rather had taken some items from the gym and they were looking for them to bring it back. So it's really unprecedented. And again, we'll talk later in the episode about opportunity, but it's an opportunity potentially for folks that maybe were prescient or made some intriguing decisions to take advantage of to grow their enterprises.
All right, so welcome back. I got a really special guest here that I was able to bring on, a really close friend of mine, Joshua Blank. And if there's anybody who knows the real estate industry, it's this guy. And me and Jason, definitely want to dial in and dive into some pressing questions that are going on in the real estate market as a whole. And, Jay, do you have certain questions that you sort of want to ask Josh, who has been in the real estate industry for decades and who owns a brokerage over in Sarasota with upwards of 50 agents, and he's been crushing it over there for a long time. But these are unprecedented times. But I'll kick it off to you, Jay.
Yeah, and again, I want to thank Josh for taking the time out of his schedule to join us on the show. Clearly, when we started to develop and craft this episode, focusing on personal improvements and how people can adapt and what they should look for in terms of innovation, protecting their portfolio. One of the core items that's come up through our listener base, Josh, and people we've talked to is real estate, the real estate market, right? There's a lot of, people are asking questions about 2008, 2009, and whether this is the right opportunity, and if so, how. I guess what we'd love to get your perspective on to kick off is, what are you seeing happening first and foremost due to the unprecedented coronavirus? It's impacting companies, realtors, brokers certainly are going to be hit by this. There's a lot of innovative challenges and new things and ways of communicating. And so on that note, maybe tell us a little bit what you're seeing right now, given the environment. And also, are you seeing a shutdown in terms of deals? What are you projecting and timelines potentially? So be grateful if you can address some of that.
Absolutely. No, I appreciate you guys having me on. Really love working with Jaret, and thanks so much. So I was a banker right out of school in 2001 during 9/11, and I was a broker, rehabber, flipper guy in a real estate guy in 2008 during the financial crisis then. So this is I would call this my third apocalypse. I've been through 3 different times where the stock market was essentially cut in half in a very short amount of time. And eventually all those crises did hit real estate in a couple of different ways. 9/11 what happened basically was real estate really started to take off. People were just coming out of the dot-com bubble, and then 9/11 happens, equities get cut in half, interest rates go to almost zero, and people started buying houses. And I just happened to be, 21, 22 years old at the time. That's now 20 years ago. And interest rates were so low that real estate, you couldn't get it wrong. Rates were they've never been under, 6-7% before. And as rates just kept dropping, prices just kept climbing. So if you put your name on a house, you just made money. And I thought I was, the smartest guy in the world. And in reality, of course, I was just the beneficiary of a bull market. And I think largely that was due to interest rates and fear. From there, people really thought real estate was untouchable. And from 2000, let's call it like 2, 3, 4, up to 6, 7, everybody was making money in real estate. So it just seemed like, well, this is the new normal. And the mortgage crisis happened. They started making crazy loans to people who just shouldn't have had the money, the access to buying a home. And it just got real weird real quick. 2006 and 7 especially, a lot of crazy loans done. Then you saw that fall apart. And I was smoked in that eventually, but it took a long, long time. I had made and banked a lot of cash over the years. And so it took a long time to eventually drag me down. I went years and years and years. So a couple of things I learned from that was, number one, never trust a bull market. I kind of say that the bull markets are bull, I really like bear markets because I feel like it's the reality. When there's no unemployment, I'm always a little leery. I've got a couple friends who every time they start making $200,000 and $300,000 a year, that to me is an indication that we're in a fake bull market. And one friend in particular, every time this person starts making $200,000 and $300,000 a year, I think it's overheated. I saw this person work, very menial jobs, switch over, start making money like a doctor. And every time this person makes money like a doctor, I know the market's overheated. So I was not surprised this time around. I actually sold my last, I did a couple of rehab projects, but my last personal home was sold, I think, in 2015. And I was coming out of licking my wounds through the 08 thing hit me in 12 and 13. It took me a lot of years to get caught. But by 15, I was selling off my personal, everything I owned, I was trying to get rid of, get rid of. Because I just felt like the market was getting hot again in a weird way. And I was 5 years early, 2016, 17, 18. The market just kept ripping up. But I was kind of this time around expecting something like this. I didn't know it would be a virus. I didn't know, the first time it's planes hitting buildings. The second time it's bad loans being written. And then this time now it's this virus. But I have a thesis that's they got these stimulus bills wrapped up in a matter of weeks. So this time around, it seems like they know the playbook. So my hope is that it doesn't have a broader effect on the economy like it did the last time, that the stimulus will start to see recovery quicker. I think the 08 deal went on forever. 2013, the market started to trend back into a bull market. But man, that's 5 years of just laying around. So getting all that bad paper through the system was really, really arduous and difficult. So this time around, I was kind of prepared for this. I don't own a lot of real estate right now. In fact, I own none. This is the first time in my life I have owned no real estate. Because when rates are, moderately low and prices are this high for this long, this time I sat out of the bull market. I said, I'm going to participate as a salesperson to consumers who need to buy and sell homes, but I wasn't going to buy heavy amounts of real estate myself. Whereas 6, 7, and 8, I was stacking up houses left and right. I had a huge rental portfolio. I thought I was a genius. I thought I was going to make money forever. So it's the old adage, fool me once, shame on you. Fool me twice, shame on me. But this time I didn't get stuck with a lot of bad paper. So I'm prepared. I'm ready. And I've got great partners in business that when deals come our way, we'll be able to gobble them up. But that's kind of my thesis to this point. From this point forward, if they get us, you just mentioned traffic when you're in New York there, right? Traffic here in Southwest Florida, I've never seen it this light before. It definitely is crazy slow. We're in the middle of season. A lot of these restaurants make their $100,000, $200,000 a month. That kind of takes them throughout the remainder of the year. And this is the big month, the third and fourth week in March and early April. This is when they make their money, and they're literally closed. So that's immediately going to affect the broader economy. Those people are going to miss car payments. Those people are going to miss rent payments, mortgage payments. And that's not good for banking. That's my number one concern. I'm not so concerned from a health perspective. I'm concerned about servers immediately missing car payments, rent payments, mortgage payments, and then what that does to the banking system, because that could trigger an issue. And if they're quick with the stimulus, if they're quick with stabilization, we might have a little hiccup and get right back to business. But my concern, and I'm agnostic as to what's going to happen. I'm not one of these guys like boom economy, boom economy, boom economy. And then when you hit a boom economy, they're right. And I'm also not one of these guys who's like doom and gloom, doom and gloom, doom and gloom. And then eventually they're right. Like you have all these people who are like predicting what's going to happen all the time. And you're going to actually be right. If you're the boom guy, you're going to get a boom eventually, right? And if you're all these guys who it's doom and gloom, it's doom and gloom. Gold, 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 gold. Buy gold. Yes, eventually, if you say it's going to rain every single day, eventually it's going to rain, right? Like, get it right eventually. So my thesis is be ready. I personally happen to, I think, get this right this time, and I'm wrong a lot. I've been wrong many, many times before. But I think I got it right, seeing that the economy was a little too good for too long and liquidating a portfolio. But we're poised. We're ready. That's my thesis to this point.
Yeah, Josh, incredible insight there. You know, obviously, there's a lot that you threw out there in terms of the residential market, in terms of the commercial market, the stimulus package, et cetera, what's going to happen. But I think that a lot of people aren't really the average person, let's say, you know, not someone dialed in like yourself or whatnot, who doesn't understand the ripple effects that this is going to have in the real estate market from a residential perspective or a commercial perspective if we are shut down for what could be months, right? So if there's inactivity for an extended period of time, and I don't think the stimulus did a very good job at addressing some key important things. It did a great job in terms of, you know, small businesses providing some loans there, but they're making you jump through hoops in terms of tax returns and personal financial statements. And you got to go through a lengthy process with the SBA. And that's not as quick as it should be. There should have been a lot more, you know, forcing the banks to do some stuff and step in and provide cash immediately at their locations or whatever it is, you know. But in terms of, you have so many agents under you in terms of 1099s that aren't going to be helped as much as they really need to be helped when there's a shutdown of an entire industry. I know people, you know, for instance, who are in different parts of the world where they're realtors and they can't even do showings in buildings, right? So there's going to be no income for them for a while. And the 1099s are not really taken care of in the stimulus at all. But as you said, somebody not being able to make payments, whether it's their car, whether it's their mortgage. But then also, let's think about the commercial perspective here. Restaurants, Cheesecake Factory is basically saying, we're not paying rent, right? Yep. So how many other restaurants are going to follow suit? So
coffee shops, restaurants, bars. I mean, everybody's, it's like the Mexican standoff. We all got our guns drawn. Who's going to fire first?
And Josh, have all the spring breakers left? Just as a side note.
They couldn't even come. It was so bad.
Oh, they didn't even
come. Yeah, they're gone. They left. They canceled flights, man. It was bad.
Oh, man. So, you know, with all this being said, you know, Josh, we joke about it, but, you know, it's going to be hitting people hard, landlords who are holding notes. And then, like you said, that's going to trickle down to the banks and what policies are they going to implement, you know, and there have been rumblings that this bull market, as you put it, has been going on for too long, that when it does collapse, it's going to collapse the commercial real estate market. A lot of people are predicting. So, you know, what are you, I know you mentioned you're sort of agnostic a little bit, you're sort of waiting, but you sort of predicted this in a way by getting out of, you rehabbed hundreds of homes and you sort of took a step back from that entire process because you knew something was up. So, you know, tell us.
So in 2017, I made a modest income, a good income, you know, at rehabbing homes. And in 2018, I started having to pay so much for the homes that I was not profiting. By the time I paid my partner for the capital, I always raise capital to do these deals. By the time I paid my overhead, paid myself, and a little bit of staff and a little bit of interest to some partners, I was just breaking even, losing a little, making a little. And I was like, this is just not worth the effort and the risk. So about 2 years ago, I called my partner up. I said, we need to liquidate the portfolio. We're going to take a little hit. It's just the time to do it. And let's just focus on sales for the next 2 years. So the last 2 years, I built a brokerage selling stuff. So I think my personal risk is limited there. And I think the agents don't have the same amount of risk either, right? Like if you're an agent, you probably have a couple $1,000 invested into getting a license. And then you probably have, if you're with Trend, you have a small, very small monthly membership fee and a small transaction fee. You're not paying huge overhead. I know when I was at some of the big box shops, I had what's called a desk fee. I was paying almost $1,000 a month to work there. So I think from that standpoint, the brokerage is enhanced by a recession as well. So I personally, my holdings were recession enhanced. And then my brokerage is recession enhanced because you'll have the people who don't want to pay the Keller Williams, the Remaxes, 20, 30 grand a year. They're going to find a boutique firm like mine. You're really going to have to work hard to pay me 5 grand a year. And you know, the delta between 5 and 20 or 30, I was paying Remax almost 30 grand a year. That's $25,000 is a lot of money. So especially in an economy like this, I think the brokerage is recession enhanced. I think my holdings are nil, so I'm recession enhanced. There's good opportunities there. And hopefully I've embedded that to some of my agents. Over the last couple of years, I've really been talking about keeping your business overhead very low. I've been the kind of guy who, when I started my business in real estate, I ran it out of my house as long as I could. I had 3 or 4 employees showing up to my house. So I hate overhead. I've tried to scale businesses a couple of different times and got my clock cleaned. Every time I had tons of staff and tons of overhead, the market seemed to do what it just did, which was dip a little. And then I got smoked, eating, salaries and all this kind of stuff. So my personal opinion is keep your business overhead low. And then my personal overhead is like the lowest it's ever been, lower than when I was 22 years old, 23 years old. So I've got my personal overhead down to like almost nothing, preparing for this. If you haven't prepared for that and you're in a position where you have high business overhead, high personal overhead, or you're a bar or a restaurant and you're like, how long do I pay my landlord before I, burn through my savings? I personally did this. I burned through years of negative cash flow out of reserves and savings to the point where I ran out of money and had to file a BK, right? It's not a real sexy story. But I learned from that. So I share that pain only from the perspective of hopefully helping some of you out there. I mean, look, this is going to be there's going to be bankruptcy filed from what's happened already. There's going to be tons of bankruptcies just from this. In addition to that, there's going to be more coming. So let's not be naive and think that, first of all, the capitalistic system, if you have to file a bankruptcy, I mean, look at the president of the United States. It happens. I had a huge personal moral hang up on it. So I grinded to the point of like insanity.
Yeah.
I would just say to people, look at it as though you were a doctor with a cancer diagnosis. If your business, if your restaurant, if your bar, whatever you've been doing is simply not working and it's destroying your financial life, destroying your personal life, be quick to cut that cancer out. Be quick. If you have to file bankruptcy, that's the system is built on this stuff. Banks do it. Presidents do it. People do it. Don't beat yourself up personally. I beat myself to death emotionally and personally from having to go through it, and that's why you and I coached here, because I was like, oh my God, the mental, strain and wherewithal. I hired you. I was like, how do you get through this? So my advice would be, don't take it personally. This is out of your control. Just like the 9/11 or the mortgage crisis, this is out. I think people know now these collapses happen and they're out of our control. So we can do what we can do, but you can't be, robbing from every, children's college fund or 401k or IRA. I mean, I emptied every account I ever had to try to pay people back, which I think was an honorable thing. But, this time around, I'm not in the position I have to do that. But if you're somebody who has assets that are protected legally and ethically, I would say, use the law to your advantage, like the big companies do, like the banks do, like Trump does, Be somebody who plays by the book, follow the law, of course, but there are ways that you can default strategically on some things and not totally blow up your whole world. And don't just murder yourself emotionally about this. This is not something that anybody can prepare for. It's like every 7 to 10 years we have these major blowups, and it's pretty crazy.
Yeah, I mean, if people were carrying debt before this, for instance, and look, I mean, if the cards are stacked against you, if you don't come from a lot of means, for instance, and you got to take out credit and you got to take out credit cards where you're going to pay 20-30% interest. I mean, the best hedge fund guys, who are top 10%, maybe make 10% of their clients' money in a given year. So to have to pay a credit card company 20-30%, the cards are stacked way against you. So this thing is going to speed up a little bit for a lot of people. Expect bankruptcies, all that kind of stuff. But the government stepped in before in '08 when we did have a housing crisis, right? Do you think that if this happens to the real estate market, that the government should step in again there? And again, do another stimulus, but focus more on real estate and the banks and whatnot. If they are solvent now, but if they become insolvent, and in terms of the '08 bailouts, a lot of people believe that they were just band-aids. And are those band-aids going to get ripped off if the market goes down to 15, 16? Josh, what's going to happen there? And if people are going to pull their money out of the stock market because they need cash to pay bills. And then obviously the real estate market, they're pulling home out of assets.
I think where everybody was chapped the first time around was banks were getting bailouts, but consumers weren't. Banks that were getting billions of dollars were calling loans from performing loans. If you had a performing loan, they could just call you up and say, we're not extending your line of credit. We'd like you to pay down the principal. And that had never happened. Borrowers just weren't set up to be able to pay loans back in giant chunks. Like if your portfolio, like mine did, got cut in half, I didn't have half of the debt that was out there in liquid assets to pay the banks back. Performing loans were being called. Banks were calling up and saying, you got to pay us down, you got to pay us off. And there was no other bank to pay them off. So banks can easily just say, line of credit's gone. That's something that happened to me. I had a commercial line of credit. My bank shut down. New bank stepped in. They're like, we're not going to extend your line of credit. And I was like, that's how I make a living. Like, I buy houses that are distressed. I fix them up and I resell them. It's like if you were it's like the restaurants now. If you can't go to work, you can't pay your bills. If I can't fix up houses, I can't pay my bills. So I'm just not a fan of debt and leverage anymore. I've really learned my lesson there. So I think you're going to see a broader hit. I don't know how deep it'll go. I don't know if it'll be, 08, 50% off. I don't think it'll go there because here's the thing. There's less, the loans that are out there right now. I see a lot of people buying and selling houses. The loans that are out there, most of them had some sort of a down payment. Even if it's 3, 5, 10% down, there's some sort of a down payment. The last time around, the loans that were failing, there was no downstroke. People just literally were like, it's like, well, I'm renting here. I might as well own it and rent from the bank. So the bank's liquidity is my issue. They have a reserve requirement of about 10%. And recently they waived that requirement. So, fundamentally, I'm kind of a libertarian. I don't like government intervention. I don't like crony capitalism. I don't like banks, defaulting on stuff and getting money from the government. But as a pragmatist, this is the system we're born into, right? There's giant banks. Everybody keeps their money in a bank. So you kind of like got to dance with the one that brung you type of deal. Like we're in a system of huge government, huge banks, and huge debt. Like it's just a fact of life. So we can sit here and opine all day long. I follow a lot of economists who talk endlessly about, we should have a gold standard and all these other things, and doom and gloom from leverage. I agree. I fundamentally agree with them. However, practically speaking, gold is metal, right? Like I'd rather have shares in Amazon or shares in a company that was providing a service that people wanted than shiny metal. Like you can't sit here and tell me gold is this great investment. It's not. It's metal. Okay, it's metal, right? I want services that provide for human beings, because human beings, we will trade. Okay. We're going to trade stuff. We're going to trade my service for your service, and we're going to come up with a medium of exchange. Gold is not some magical thing. It's metal. Okay. Like, I'd rather have a functioning business that produces cash flow or value, right? Like, Amazon obviously makes lots of people happy every single day. So if I was an investor in equities, I'd be looking for things more like that rather than metal. And when they talk about, a medium of exchange, sure, I would like a medium of exchange that wasn't like funny money. Like, they can just literally, they don't even print currency. They create it in, digital zeros and ones. There's not a printing press there. The dollars are almost out of circulation. Like, 99% of what we trade is electronic, or, in a credit card, via, numbers. Like, cryptocurrency is stupid because the dollar's already crypto. It's already electronic. Okay. Like, if I pay you, the numbers on my credit card go to you in your bank account, and they sit there in a bunch of zeros and ones. There's no actual, it's just a promise, right? It's a promise between people. So yes, they're going to print more of these promises, and thus essentially steal from or dilute currency. They're stealing from savers, right? Or investors. If you had $1 million and they print $10 trillion to get us out of that, that's going to lead to inflation, and inflation is a theft from savers. But, that Rich Dad, Poor Dad, the Kiyosaki book, which is so popular amongst entrepreneurs, has been touting this for years. Like, why would you save $1? Because 100 years from now, that dollar is the equivalency of a penny. So on the one hand, I understand that. But on the same hand, every time we get in these bubbles, these debt bubbles, these crises, we as consumers or investors are always stuck holding the thing that's worthless, the house, the equity, the investment in the business, and then the debt is still there. So I get it. I get that currency loses value over time, but it's really hard to time it right. It's really hard to get into the market, borrow. People are always like, borrow money, buy assets that appreciate, and then the dollars go down in value. Except for that doesn't work all the time. Here's a perfect example. The debt's going to stay there. People are going to want their money back. And if your house crashes, if you're on margin in the stock market and your stocks crash, you're toast, right? So in the broader sense, like, as a purist, yes, I wish we had a gold-backed dollar, and I wish that currency appreciated in value rather than depreciated. But it just doesn't. It's human nature, right? Like, we're always going to have we scam ourselves, right? Inflation is like, why do goods and services go up in cost over time? Because we're stealing from ourselves in a way. We're stealing from the future, right? Like, we want to devalue currency because of debt. It's like this wicked cycle. Does that make sense? Like, we do this on purpose to ourselves, right? Like, we print money, and then we print more of it, and then we print more of it, and then we print more of it. And all the printing does, or the digital creation of currency, all it does is devalue the currency so we can keep up. It's a never-ending cycle. And every year, when Bush is in, they're like, oh my God, Clinton doubled the deficit in his 8 years. And then Obama says it about Bush, and then Trump says it about Obama, and then the next guy's going to say it about Trump. Oh, he doubled the deficit. That's the natural occurrence of our currency. Our currency always goes down in value. We always spend more money cumulatively than we bring in, and hence we always have more debt. So it's a human psychological factor. It's not like, I'm not so concerned about it structurally, because we just keep doing it. And every year they say the same thing when they're running for office. We're going to balance the budget. It never happens. It's never happened. I don't know that they can do it. And I think inflation and debt is kind of like a way of life for us until there's some sort of structural change. Now, something like this coronavirus, maybe something like this could be the impediment to change, but I highly, highly doubt it. I think you're going to see more kicking the can down the street, more money printing, more wealth creation out of nowhere, which will then, of course, actually be wealth devaluation. If you have $100,000 in a checking account, I think if you fast forward 10 years, that $100,000 is going to have about $82,000, $85,000 in buying power. I think that's the natural economy that we're in. We don't really want to work and save and not spend. We want to take a loan out. We want to borrow money. We want it's like the marshmallow test for kindergartners. the people who can defer the one marshmallow to get two later, right? It's that whole thing. But we're not cumulatively, we're not good at that. So
the ones who actually had saved money, Josh, right? I mean, they're looking smarter and smarter every day when the market tanks, going down 30%. And if it drops to 15, like some people are projecting, they actually have the liquidity to go buy now and buy assets cheap, right? So they're looking actually smarter and smarter every day. So it's interesting. I know Jason has, a few more questions that he wants to, ask specifically.
Jump in and stop.
Oh, well, one thing I would say, and I think I speak on behalf of a lot of people, you talk about gold and other metals. Right now, I mean, I would kill to have some gold bricks in my house to use as weights. I don't know if you've seen Amazon. Every store is sold out. So you talk about supply and demand and, stocking up for issues. I would have never thought there would be a mass kind of exodus of all these things in our society right now. I mean, gyms are shut down. It's truly unprecedented. That's a kind of a side comment, but it's a fact. And Jaret, obviously being huge in the health and wellness community, a lot of people weren't prepared for this. And if you live in cities and have, small spaces, which is considered when you're looking at, real estate, and kind of ties into the next thing. Like, so we've talked a little bit from a macro perspective, Josh, and great insights, clearly all the way around your perspective. But from a micro standpoint, if you look at individuals, and I think I would fit in this group. For years, I had a 2-family house. I bought it in 2010. And my idea was always, okay, I'll live in, one of the units and then, subsidize my rent payment. And what happened was I ended up moving overseas and, turned it into a rental property and tried to manage it. And if you're not in that industry or in that space, it's very difficult, right? Time consuming. The cost can pile up, especially if you're using a property manager and you're not there day to day. I guess I kind of thought I was taking, and I maybe didn't put as much thought into it. And there was incentives, right? Back then, especially rebates and things of that nature to push you to buy a property. Now in today's environment, and we're seeing this a lot, is people are asking the question, buy, is now the good time to buy? Is it a good time to rent? What should I be looking for in making a prudent decision? I actually was thinking the other day, renting, I like it. I like having the flexibility. It could be expensive depending where you are, but could it be a good time to potentially buy? And, from a loan standpoint and a cash perspective, what are you telling people that are reaching out about, intrigued about renting, buying right now?
Good question. There was nobody who was a more of an advocate for buying and renting property out than myself. And it worked for a long time for me. I was buying houses for, let's say, $75,000. I could get $1,000 or $1,200 a month in rent. The numbers worked. I was making $300 or $400 a month, maybe $500 a month in passive cash flow. And then I would refinance it, take a chunk of money out after I fixed the house up, and then do it again. So it worked really well for me. The issue is several points. One, there's nothing passive about rentals. There's, these books that are like passive cash flow. There's nothing passive about it, right? Like,
I came home to a kitchen gutted one time. Completely gone.
Ain't nothing passive about this. It's pretty damn active, if you ask me. So it's tough. I will say that I now view housing as one of the worst asset classes to buy. And I this is a big change for me because I owned at one point like 97 units myself personally, me and LLC and like a couple of employees, like no other owners, just me. And so I owned a lot of rental units, and I got to see like the back of the napkin, the real estate book, like principal, interest, taxes, and insurance, a little bit of maintenance, property management, and you make a ton of money. It's so much thinner than that. I can't even tell you. It's always skinny, like the gutted kitchen. You're in Singapore or England or wherever you're at, and then somebody's trashing your duplex in New York, or it's a nightmare, right? Like there are so many other businesses that you can make money at and not have the debt and the stress. So I look at housing as a consumable good, right? Like it's something to me, it's like food. Like you need food, you need a house, you need some place to live. So when people talk about real estate being like this mecca of perfection of investing, look, there's very few people who've done more real estate investing than me. Of course, there's lots of billionaires or whatever. But I'm saying as an average Joe kind of guy, very few people have done as many rehabs as I have. Very few people have done as much landlording as I have. And I'll tell you, it can be utterly brutal. I think if I took that same effort and energy and put it into medicine or a different kind of sales or insurance, I could have made maybe 3 or 4 times as much money. It's fine. Don't get me wrong. I've been a 1%er. I've made millions of dollars. It's great, but it's very, very, very hard. This idea that the real estate is easy is garbage. So my contention is look at housing as a durable, little bit durable, but really consumable good. You buy a brand new home, 3 years later, there's stuff breaking, right? Like I had a house, I bought my dream home. 7 years in, the roof was going bad and one of the HVAC units quit on me. That's like 15, 20 G's. It's like, that's not you got to factor much more maintenance and much more management costs in to almost every real estate book I've ever seen. The reality, the real world, like principal, interest, taxes, and insurance, maintenance, and repairs is much higher. The maintenance and repairs is almost incalculably higher than you think. Like you think, like, what's going to break on this house? Something. There's always something breaking. So my 2 cents is it's something to do. It's an investment. It can be good. But where I'm from in Illinois, they've been raising real estate taxes and state taxes. The values have not gone up in like 15 years. So you got to be so right on the market. Now in Southwest Florida, it's booming. The last 7 years have been insane. So you got to get everything right. You got to get the right house, the right tenant, the right neighborhood, the right market, interest rates working in your direction, the economy working in your direction. There's so many things against you. As a personal financial person, I used to kind of mock people like Dave Ramsey and like saving money. You're so stupid. But I really come full circle on that. And debt and leverage and like the Grant Cardone, like borrow your ass off and you go get it. That stuff is dead on me. Like I'm much more like, if you have a small business that's manageable, if you have low personal overhead, low business overhead, and you don't borrow too much money, I'm telling you, you'll sleep better at night, you'll have a better life, and you'll end up richer in the long run. So my whole contention is that there's not magic in real estate. I think commercial real estate, like you said earlier, Jared, is going to get kicked in the teeth. I think it's going to be real ugly. And I think some of it's going to drip over into residential. But Southwest Florida in my area, once they get restaurants and bars back open, once they get tourism going, it could snap back quickly. If we're locked down for 3 months, 4 months, it's going to get ugly. If they keep this to a couple of week thing, we could be just fine. It can recover. We can heal. We can do these kind of like token stimulus things. It's going to get bloody. There's no doubt about it. There's already blood in the streets. But some of the best years I ever had were in bear markets, and some of the blood was my own, right? So that's my thesis is it can be a great investment, but you got to time almost everything right.
Yeah, and Josh, you talk about getting kicked in the teeth, and sometimes you realize when you get hit with that bill to replace a hot water heater, you need a new roof, and it's the whole thing, right? The whole thing about depending on how you do it, but stuff hits quick and it gets very expensive. And if you look at Jared and I were talking this on another episode, but if you look at some of the averages that people have saved for a rainy day, it's just not there, right? Mm-hmm. So it goes further into your whole thesis of talking about how most folks are. It's a consumable good, but it's not necessarily, you got to be really smart about doing it. You have to have all the necessary pieces in place to be successful and ensure you're not going to be hit with hardship because the market is dipping and there's a lot of ups and downs there. So I guess, Josh, coming kind of full circle, Trend Realty, your business, I'm on the website now, trendrealty.io, really, really interesting site. I mean, you talk about some what's happening from a macro, micro. You obviously have a very successful career. You've had your own blood in the streets. You've seen the good times, the bad times, or worked with thousands of folks. What are some of the things you're doing in your business to combat this personally, to stay ahead of the curve? And what else are you seeing on the ground? For example, in Miami, I was talking to Jaret the other day. It looks like there's a lot of closings for showings for realtors and stuff like that. So just you personally, your business, maybe ideas you can share with others. And then also how people can potentially get in touch with you or follow your company as well, pre and post show listening in. So it'd be great to hear a little bit more about that from you directly.
Yeah, absolutely. So you could always reach me, phone number, emails, all on the site there. You can reach out to me there. I have a YouTube channel as well where I put some of my content up. It's really for my own agents. Like I've created just video content for training and purposes. It's not for entertaining the masses. So it might be a little bit dull. It's not like, infotainment. It's really like good, solid information. But with regard to Trend, I'm trying to practice what I preach, which is I keep my overhead very low for my agents. So I had an agent last year. He did 6 figures. He probably paid the company $6,000 or $7,000 to do that. Now, if he was with Remax or Keller Williams, that would have been 20 or 30 grand. So I try to keep my agents' overhead low as well. So I'm trying to convey to the market what I believe in, which is there's no point in having a big showy office. We spend our money at Trend on leads for the agents. So I do spend a ton of money, mid 5 figures a year for my agents on leads. So leads are your currency, right? Like in this business, if you don't have somebody who's looking for a home to buy or sell, what are you talking about, right?
You want the Glenn Gary leads, right?
That's
Anybody
right.
that's seen Glenn Gary, Glenn Ross, give me the good leads.
What a great scene in a movie, right? Like everybody bitching about the leads, they want better leads. Look, leads are a 1 out of 100 or 1 out of if you're awesome at leads and you're great in sales, you're going to get a 3 or 4% conversion rate, right? Like that's 1 out of 25 people you got to talk to get a sale in the next, let's call it 3 to 6 months. So those leads are your currency, right? If your broker's not providing you leads, you better be paying them next to nothing. I was paying brokers $30,000, $40,000 a year, and they weren't giving me leads. I'm like, what are you giving me? Like advice, like sit more open houses? I'm like, why would I drop 30 grand a year on you to tell? Or we have this great office. The office nobody walks in the office and buys real estate. They're on the internet. They're on their phone. They're using this, right? This is where we're shopping, right? So what I provide my agents with is leads from this. Consumers are here looking for houses, so I advertise here. So that's my biggest thing going forward. And Jaret and I were talking about this earlier today, actually, is I need more leads in front of my agents. So how do we get cost-effective leads that will convert and jam these leads in their mouth? Like agents, there's 2 ways you can get business really outside of your own network. Like if you're Jaret and you're licensed in the Miami area and his parents sell their condo, well, of course they're going to use Jaret, right? Of course, right? His uncle comes down and wants to buy a condo, of course they're going to use Jaret. But outside of friends and family, where do you generate business? And there's like 2 ways to really do it, right? Internet leads, like people shopping on third-party websites like Zillow, like Realtor, Trulia, websites like this. Or you can prospect. And all prospecting is getting on the phone and calling expired listings and for sale by owners. And after training agents for the last 2 years, I can tell you, agents do not want to make outbound phone calls. They just don't. I did it. I have friends who do it. If you can bring yourself to do it, you will make a lot of money. You'll make 6 figures as an agent if you're pounding the phones. But agents don't want to do it. They're not trained salespeople. They're consumers who want to help other consumers, and they think it's fun and friendly to show property. They don't want that. They don't want like grinding sales business. So I'm of the mindset of let's not take, your average agent who wants to sell 6 or 7 homes this year, make 50 grand, and let's not try to turn them into a killer salesperson. Let's take them and buy them leads and help them get there. They'll do their 2, 3, 4 organic deals just from people they know. And let's try to get them 2, 3, or 4 other deals closed from my lead system. So that's what my focus is simple, easy business that I can put in front of them like a layup. Let's not make them sharpshooters, from half court. Let's give them layups and lobs. Let's keep it simple.
You're creating the Shaquille O'Neal's of the future, right? Just lob it up, put it in the old-fashioned way, and it works. It's 2 points. 2 points is 2 points, right, Jaret?
100%. Yeah, Josh, you don't sugarcoat it, man. I mean, I love the pragmatic, practical approach because there's so many brokerages that just talk a big game and basically say how easy, whether it's this profession or a different industry, how you can really make it if you work hard. It's so much more difficult than that for the average person, especially if you work for yourself, right? Yeah. There's so many things that you have to account for and variables, and you're really just shedding light on what it takes to make it long term and something.
Absolutely. Look, I mean, to build this business, I had to get on the phone and call new licensees. And people were, oh, new licensees suck. They have so many questions. Why would you call them? Just get existing agents. Well, to get an existing agent to leave a brokerage, they got deals pending. They got stuff going on. They either have to be absolutely angry to just furious with their current broker, or they have to be almost like a non-producing agent to want to leave. So I decided I was just going to go after newer licensees, get in front of them, train them, coach them, help them the best I could. And that worked really well for us. And I had people telling me, oh, these people are no good. You shouldn't do this. Don't waste your time. Just get the winners. And I thought, I don't need everybody to be a killer salesperson. All I need is for people to show up, care, try, and work hard. But with my prescription, and my prescription wasn't grinding cold calls, right? My prescription was, let's network, let's get you on social media, and let's get you leads. Let's get people calling you. So I think that has helped a lot of my people. I know a lot of my agents were able to make it. One guy in particular, he did 21 transactions last year. His name is Jason. He's a great guy. Of those, 10, let's call it 10 of the 21 came from a lead system that I put him on. Now, he worked it really hard. The credit is his. He's a hardworking guy. But he'd have done half the business without those leads, literally half. So there are people who don't want to work that hard. There are people who do it part-time. There are people who don't want to spend money at all. So there's other ways to skin the cat. But the people who really do well and listen to my curriculum buy leads. I don't know how else you do this business. If you didn't have leads, I just don't know how you do it.
Yeah, so thanks so much, Josh. Yeah, really insightful stuff. And, in terms of the coronavirus, the pandemic that people are facing, your brokerage, what you're telling your agents, how are you preparing them to weather through this storm? And what advice would you give to our audience in terms of, whether they're in the real estate market or not, whether they're renting, they're owning or whatnot, how is it best to approach what's going to happen in the next, coming weeks?
So I say three things I'd say is, number one, stay safe, keep yourself clean, only do things that you're comfortable with doing. If you don't feel like you should be sitting open houses, don't sit them. If you've got a compromised immune system, take a month off, chill out at home. This is the opportunity of a lifetime to kind of catch your breath in this world. So number one, stay safe. Number two, stay calm. Things are going to work out. Even if you have to go through a little bit of a bump financially, like I've had to in the past, you will live. Nobody comes to your house and cuts your head off. You'll live even if you miss a bill or two or your credit takes a hit. People lose their minds over that kind of stuff. I've had great credit. I've had bad credit. I now have great credit again. I'm just going to tell you just to stay calm as well. And then finally, just realize it always comes back. They always come up with new systems. They always put us in front of opportunities. And the market always comes back. I remember in 2009, I was like, there's no way the stock market's ever coming back. And a few years later, it doubled. And I was like, I missed it. Like, what am I doing? So, stay safe, stay calm, and just know it always comes back. If you guys ever need to reach out, talk to somebody about real estate. Again, I love real estate. I love it as an investment, but you got to time it right. And I'm not one of these people who's just going to jam it down your throat and pretend it's some magical pill that it's not. All of it's difficult. All of it takes work. All of it takes diligence. But you can skip 80% of the fluff and just get to that 20% that really matters.
Josh, thank you. On behalf of all of us, so hopefully the next time is in person in Florida. We're meeting. We can have a follow-up discussion with the community. But it was a great, insightful discussion. And I think brings a lot of perspective, brings a lot of things to the forefront, and lets people use this time to really think through it and think about their own personal situation, what their plan is going to be after this. Because as you've said, skies will get bluer. Things are going to improve, and there'll be a lot of opportunity that comes from it. And we saw it with 2008. The market, it will adjust. The second some of this stimulus gets pushed into the community and business is coming back to the forefront, we're looking at other parts of the world already starting to rebound a little bit. People just have to take that with a grain of salt, one day at a time, and moving forward. So thanks again on behalf of all of us for taking the time. It was great to be with you, Josh Blank, everybody.
Thanks, guys. Really appreciate it.
But for that matter, you're talking about productivity and things to do to pass the time, and certainly the days, depending on what your work is, I guess the days can move faster or slower, because when people are home in their professions, they're expected constantly to be by the phone, right? Expected to be on video calls, right? We're seeing a proliferation of Zoom and Slack and being more efficient. I can tell you personally, I use both of them. I'm a big fan of Harvest. It's like a browser extension that truly tells you what eats up your time during the day. And I think, especially in the environment we're in now, and given all the things you talked about, you've got to use the time to be very, very efficient, right? So Harvest, Evernote is another one that comes to mind, which helps you kind of consolidate text notes and photos and reminders of things that are happening in your experience. And you've got probably better perspective on this, given your entrepreneurial background. But what are some of the online tools that people could use or tap into now that they're working remotely from home to be more efficient throughout the day?
Yeah, so you mentioned a lot of them. Obviously, Slack, Zoom for video conferencing. If you're working with teams, there's tools like Asana, which is really a nice task management platform. You can assign tasks to individuals. And I actually created a platform called Task Chat that's sort of a combination of a lot of these. So there's a ton of resources out there where you could sort of bring your work from the office to your home and still being very effective. But there, are a lot of jobs that can't rely on the online, replacement, so to speak. Restaurants, bars are going to get hit really hard during this, and even professionals. I mean, New York just placed restrictions on dentists, believe it or not, right? So like they're only allowed to do emergencies only, and they'll get heavy fines if not. So a lot of dentists are just closing up altogether. So there's no replacement for a lot of businesses in terms of the online space, which is unfortunate. And yeah, we'll see. I mean, I think that we're in for a long haul, and things might not get back to normal till, my guess is maybe June 1st or so. Even with restrictions, there might be on there for a heavy period of time. So we'll see, Jason. But what do you think people should do to prepare if they are going to be laid off, if they're potentially going to lose their business? If they have a restaurant or bar, and if there's little to no income for a couple of months, what's going to happen? What should people do?
Well, I think, and let's say we'll save the stimulus package and some of those other items for later in the program. I want to talk about just in general what folks can do on their own. I think that might be valuable. First and foremost, I think if you're really at risk, you got to, certainly look to apply for unemployment. I mean, that's not a joke. I think most states have waived the waiting periods that are in place for people who are out of work due to the COVID-19 closures and quarantines. So if you're seriously under pressure, maybe don't have the necessary reserves saved for these emergency situations, I think that's first and foremost something that needs to be considered. I think that, you have to look at your overall structure and where you might be able to take opportunities, right? Look for the opportunities. The gig economy is still strong. As you can see, many companies and small business, I stated our yoga studio here, and restaurants are doing takeout. They're encouraging takeout, and people are partaking in that. Again, this is a situation where everybody has to kind of come together collectively. And quite frankly, Jaret, I mean, especially here in New York, I truthfully don't want to be going out. I don't want to be going out even to a grocery store. They're smaller. You have really close quarters with folks, and it is high risk. So you're going to be leveraging those types of industries a little bit more. But again, I think it really comes down to if you have the ability and you've got the reserve set aside, and you know about some of the stuff, the stimulus packages that are coming down the road, which we'll talk about a little bit later. Use it as an opportunity to build some new skills. Right? Skills are, you and I have talked about this many times in the past. This is the future currency. Right, especially things you can do to make money online, right? So you do not have to be as reliant on going to an in-person job interview or having a boss that can lay you off. You can control your destiny a little bit more. And look again, take advantage of any freebie opportunities. There's a lot of discounted services. Companies across the board, from T-Mobile to LinkedIn, are offering opportunities to kind of leverage those platforms to get ahead of the curve and to provide visibility into things that might be available. So those are the things I think, just in general. Join community foundations and just try to make yourself better if you're not in a position, where you are really, really struggling and you have to find other means. You can look. Certainly, there's plenty of jobs that are being hired for the gig economy and for what we call essential businesses, right? And that's, I think, Jaret, that's like grocery stores, pharmaceutical chains, right? And then I know Amazon and a handful of others are actually ramping up hiring as well. So there's those options. But I'd be interested to hear too anything else that maybe was not on that list outside of the stimulus packages that you might advise people to look at.
So we have to understand that things are shifting really rapidly right now. So let's say that you are in one sector that isn't doing so well right now. There are sectors that are doing, incredible numbers right now. If you look at what Amazon, like you said, things are on back order. They can't even handle enough deliveries that are going on. Obviously, the healthcare, industry is in dire need of workers right now, right? So that's something to obviously consider. Now, a lot of these professions are, some require some skill, whether that's, if you want to get in on the vaccine movement or testing, all that kind of stuff, you usually have to be highly skilled at that. So if you don't have preparation in that field, it's going to be hard to really tap into and prepare. But, you got to consider certain sectors, if you're in them, are going to be hit really, really hard. And all non-essential businesses are shut down. And that's basically, the restaurant industry is going to be massively affected. And there's going to be restaurants that you went to and frequented that, when everything sort of returns back to normal, are not going to be there. Neiman Marcus is talking about bankruptcy, for instance. So retail is going to take a huge hit in all of this. Malls being shut down. They can't expect businesses to survive months and months without income. And we'll get into some, stimulus package, recommendations on our end and so forth in terms of what should be happening right now to step in to help small businesses and individuals. But if you're somebody who is trying to prepare and get ahead of everything that's going on, assume that things are not going to go back to the way that they were. That meaning pre-coronavirus to post-coronavirus. There's a lot of unsustainable math problems in this country. The average American household carries, I think, $11,000 in savings. Most people live paycheck to paycheck, believe it or not. And the median checking account balance of individuals, I think, is $3,000. And the average household is carrying over $130,000 in debt. It's been an unsustainable math problem for a long time. And this is just going to speed it all up. So there will be a lot of people hurt by this, and government, what they're doing is probably not going to be enough. But I'd love to get your thoughts, Jason, on, how should the government be kind of stepping in to help individuals and corporations, and I'll give you my thoughts on it as well. But from the political spectrum, how can we sort of remedy this blow?
Yeah, and I just want to add to that too. I mean, when you look at how vast the impacts are having, everything from the gambling industry. I mean, forget about that, right? March Madness off the books, casinos. I mean, people are in close proximity, sitting at blackjack tables, absolutely, decimating. I think outside of UFC, right? UFC is still ongoing, Jaret. I mean, that's the only sport that I know of in the U.S. that's still active. But then you look at the impact, right? U.S. passenger and cargo carriers. I mean, they employ almost 800,000 people worldwide, and drive more than 10 million jobs. I mean, this is serious stuff. The hotel industry, I think, employs close to 2 million Americans. It's a big sector. And now they're using hotels potentially as locations to house patients. At least here in New York, I mean, the Jaret Center is being open. So it's having a big impact across all of the industries. Cruises is another one, right? Cruises is a big one. Shipping, supply chain management, automakers shut down, right? And a lot of these organizations are leveraging their supply chains to help with ventilators and respirator creation, right? To help. And that's what we should be doing right now, is kind of coming together. And to your point, Jaret, it comes to the, business and life will not be the same again. Specifically because companies are going to be taking a lot different measures and a different look at how they both interact with employees and the economy as a whole, how they look at, stock buybacks, the shareholder value, incentive plans for executives. So all of that stuff is coming in full circle. And that goes into, how should governments get engaged, both from a monetary and a fiscal standpoint. And if you look at the big picture, I certainly agree with, shareholder buybacks, maybe limiting them. I don't think you take them away totally, because you have to reward shareholders for making their investments in good, sound, prudent companies with strong balance sheets. Remember, a lot of 401ks, retirement accounts, pension plans carry hold these companies, and people's retirements are based off of the trials and tribulations and the hopefully the appreciation of the stock price and the paying of dividends. But that's certainly something that needs to be looked at with a very critical eye. I mean, look, the stimulus package that's being looked at now, $2 trillion. I think it's close to a $2 trillion stimulus package. It's been said it's a wartime level investment into our nation. There's been a lot of things floated. They've said, okay, well, $1,200 will be sent to many individuals, $2,400 married couples, $500 per extra child. The debate has been big time. Is that enough on that level, right? What could be done there to further enhance people's positions, right? How do you assist or increase unemployment, right? So, people are going to be going on unemployment. That was one of the things that we recommended if you were really in a bind. Well, I'm sure that's going to be going up, at least for a certain period of time. And that's something that needs to be looked at closely. Loans to small businesses, what's the right dollar value? Corporate aid, again, that's been a front and center. What of that $2 trillion, what should be put towards corporate aid? How much should backstop the major Federal Reserve loans that we're seeing? Almost unprecedented in an effort to kind of prevent the U.S. economy from spiraling into a depression, right? Jaret, the Federal Reserve is now keeping money flowing to companies, households, and cities in a crisis that some are saying, depending on timing, threatens to surpass the Great Recession, which I'm still pretty optimistic that we're not going to get to those levels. But I'd be curious to hear your thoughts on some of those points. And then in addition, right, what are you thinking about regarding things that are deemed essential national security for monetary assistance, right? Boeing, General Electric, these are companies that have requested tens of billions of dollars. How much should go there? And then how do we prepare as a country in terms of the amount of money that we're putting forth as a government towards whether it's medical equipment, investing in antibodies and vaccines to combat future pandemics and future flus of this magnitude? And also what should be going towards state and local governments, right? Is it being balanced appropriately between a state like New York, for example, which has been deemed as the epicenter in the U.S. of coronavirus? So I'd like to get your take. I've kind of structured it from my perspective of what I've been seeing in the news, but what are your thoughts around those points?
So I think each of these issues that you're mentioning, especially, have to be taken on a case-by-case basis. And when you do a one-off bill to try to settle all of these things, that's where you run into huge problems in politics. So we're seeing that now. We're trying to throw in global warming agendas in this. And the biggest pressing issue is people are not going to be able to pay their bills. And so what happens? This could be much, much worse than 2008 or 1987. I mean, people carried a lot less debt, back in those, when you're going back decades ago, than they do now. The cost of living is totally different now. So this economic problem can really be bad if there's not government assistance. There needs to be, right? Now, do we do the same type of bailout that we did in 2008 to the banks? People were up in arms about that. It was done anyway. And, a lot of people are really afraid that government is going to get even bigger after this. Bigger corporations are going to get even bigger. And the small businesses and individuals, independents, 1099s, they're going to get, be left holding the bag and being stuck at the bottom of the pyramid, essentially, after this. So we can't let big companies fail. Whether it's a Boeing or a General Electric, because there's so many other small businesses and big businesses that rely on that. So if a Boeing fails, the entire airline industry is going to be done, or you're going to have a huge monopoly in Airbus. And we don't necessarily want that. So there's economic problems there. So government needs to step in, but Boeing or General Electric is in a much different position than a small business in terms of being able to get loans off of their assets. And these should probably be federally backed loans, but the banks should be forced to lend to these bigger corporations. And they have collateral there, right? Whether it's taking over a plane, whether it's taking over a factory, if they can't, make up for this. But entire industries, they will never see that revenue again. What's been lost in quarter one, what will be quarter two. Whether it's you mentioned the hotel industry, travel industry, tourism. I mean, you'll never see that revenue again, like in some other industries where it could be made up. People will buy more in quarter three, quarter four. It's probably not going to happen that way in certain industries. So there needs to be some government assistance, but it should be more aimed at private institutions really doing the lending. And maybe the government steps in federally backing them, for instance, and then maybe you hedge your bets a little bit and the government kicks in with some. But the people who are going to be most hurt are going to be workers at these corporations. So it should not go to enriching executives if there's assistance. It's got to go towards the workers of those companies who don't have enough reserves to basically make it months without income. It's going to be small businesses, and they're basically being forced to take loans at this point. But there probably should be, if you're going to bail out big companies, then maybe you should start bailing out middle-sized companies too and small businesses, because that basically employs just as many workers when you add it. Every single restaurant, every single small business, whether it's a shoe repair store, whether it's an apparel store, they employ just as many people as these big corporations do. So you're going to have a huge problem if they go under. And obviously, independents, 1099s, for instance, checks need to be cut immediately. And so you need I wish that there were bills that were passed, sort of case by case, one by one. You sign off. How are we going to help small business? How are we going to help individuals? How are we going to help workers at big companies? How are we going to help these big companies that might not be solvent anymore? And I would approach them on a case by case basis, and that's how I move through it.
No, and you have to keep moving, right? You got to keep moving. You got to stay agile. You got to be nimble. And look, a lot of people, and fair enough. People delay their lives or delay things they might want to do now, right? Delayed gratification for later. And they make good decisions. They max out their 401ks. They have a stock portfolio. But I could tell you, I mean, I get more and more concerned when I see the printing press get turned on. I see the government borrowing money, issuing bonds, backstopping, ordering the central bank to buy those bonds. And this is it's a constant path that goes around and around. And if anything's history's taught us, right, this leads to extremely high rates of inflation, hyperinflation, and can lead to economic ruin, which is clear in many countries in the world. You look at Venezuela, you look at some countries in Europe, Japan, right? The situation in Japan, so you shouldn't be working to, even today with the situation being a little bit more dire and depending on your retirement fund, which is a solution to many people that they have today. There's other things that you can do. And one of them, Jaret, really, and this is for a separate session that we've got planned down the road or a podcast to talk about financial literacy. But that's really the root of it too, is to make sure that our economy, our youth, young and old, are getting the proper education around what is money? How does money move throughout the system, and what can you do with money? And what are some of the other alternatives? What can money get you that are good alternatives to kind of stave off some of these dire times that are going to be faced in a lifetime? So I think, when you look at people have been asking me, and I've seen it in the news a lot, what are some things to do in a time like this? Do you day trade? Well, certainly you still want to buy companies that have good balance sheets, right? Moats around their business, companies you believe in. You might use their products. You might be a fan of legendary leaders that have helped mold them over decades, right? But outside of that, right, I think there's a couple big things, and I know you could talk more in depth about real estate. You've got a little bit more expertise and a lot of relationships there, but certainly real estate is when there's a panic and people are cutting costs, you got to keep a roof over your head, right? So you're going to be making, whether it's you or there's other stimulus, people who own real estate are going to be collecting income based on that, right? But there's other things to look at as well. I've been a big fan of gold and silver bullion, right? I think that if you look at the market situation right now, when panic typically hits, usually gold, silver, some other commodities start to rise. And I think physical gold and silver bullion in particular is very undervalued. It's a low risk, good investment. And I would even encourage, some of the great minds I've heard, holding this or stockpiling some of it, accumulating it over time has been an interesting thing that I've heard. Additionally, continuing to educate yourself, go time and time again. That's the currency of the future, making yourself better. But for me, it's buying good quality companies. Being greedy when others are fearful. Certainly, I mean, there's some great bargains right now. These businesses are going to continue to improve with economic conditions. Real estate is something to always look at. Gold and silver, and then I like food as well. I think that it's another staple. People can't live without it. If you have an opportunity to purchase land where food is being grown on, whether that's something simple, like avocados, tomatoes, essentials, right? So these are all areas that I would encourage people to look at, but it really all starts with education, and education in particular about financial acumen, improving that day to day. So I think that's a big thing. So what do you have to share with our audience, Jaret, I guess, on your expertise around finance, economics, and of course real estate being one of the main ones?
Yeah, so I think that this is obviously a very volatile time. So there's a boatload of money to be made, whether it's in the stock market right now or other assets, for instance. I think, like you mentioned earlier in the show, Jason, you were talking about how we got to be optimistic throughout all this. And if you look at the history of time, there have always been, whether it's recessions or even depressions, you go back to 1930s, what happened there. You could buy cheap, and then the market basically is going to go up. And this is how a lot of people made a lot of their money, is they bought things, at cheap, whether it's real estate, whether it's assets. And most millionaires, I think there's a stat out there that it's 90% have made their money through real estate. So, that leaves a small percentage to be able to make it any other way, so to speak, right? But the market is a way to be able to do it. Now, I would say that if you follow the historical patterns, it would be the advice that I would probably give people is wait till there's, a rock bottom that you feel, and you're never going to be able to time the market, but wait till there's a rock bottom that hits, and then go in with what assets you have available. And you're going to, play the long-term game. And in 10 years, you're going to be able to make, substantial returns on that money, whether it's doubling, tripling, quadrupling your money, even if you just do an S&P 500, index fund or whatever it is. But I don't think that this is going to follow the historical trend and pattern. I think these are really unprecedented times. I think based on the reasons I was mentioning in terms of how much debt the average individual carries compared to the assets that they have and the cash that they're working with, that it's been unsustainable for way too long. And there are some rumblings in the commercial real estate market how this was a bubble that was waiting to implode, and it's about to now. And a lot of the '08 band-aids that were done, because that's what a lot of the bailouts and the stimulus packages back then were done, to make the banks solvent. Now the banks are solvent now, a lot largely in part because of what happened in '08, but a lot of other businesses are not going to be, and so forth. And there's going to be a lot of ripple effects from this. And I think that the economic system, being an optimist in all this, that it was due for a reset, and you can't just keep printing money over and over again, like you were talking about, which creating hyperinflation. But if you go back to, some figures in terms of assets that America owns, we're compared to, we say that our debt is a problem, but if you really look at the numbers and understand the assets that America carries, not just, the people in the companies, but, physical assets, there's a lot of money there. So this has been probably due for a while, the fiat currency that we're going off of. And so now might be a time to be able to capitalize.
So Jaret, on that note, while it's fresh in my mind, you're talking about some really interesting things and irrational exuberance and being in the moment, right? So, I've got it up on my screen here. Example, Norwegian Cruise Line Holdings, 5 days ago, $8.22 a share. Right now, in the after hours trading session, this is March 25th today, it's $17.25. So it's a little more than doubled, right? So, I mean, what do you, and so if somebody is looking, especially a young person that maybe be newer to investing, and they're looking at this, I mean, what do you, what's the advice on, and this is popped across all the depressed industries, predominantly, the airlines, Boeing has popped, of course, the cruise line. So what are you telling people when you see this stuff?
If these companies are going to get bailed out and they've been deemed too big to fail, then you're basically safeguarded, right? That basically you if they're super cheap because people were in a panic of what's happening in the tourism industry, for instance, Peter Lynch or whatnot said, look around you and invest that way, right? So airline tickets, you could go fly to Chicago for $20 right now. So they're taking an enormous hit, but that means there's probably a good opportunity to be able to get in at a very low price, whether it's Royal Caribbean or, these cruise lines that you're talking about. So this is Warren Buffett's strategy for a long, long time. Just wait for panic and then you go buy. So I think that, if things stay current to the historical trends, that's how it's going to be. And this is a time for you to be able to get rich. However, I think that there's a major wealth transfer happening right now. And that's part from the stimulus package. That's part from the hyperinflation. That's part from the debt that people are carrying that's unsustainable. A lot of businesses are going to close. That this unsustainable math problem has to correct itself. And the stock market is probably going to face major changes. That's my belief. And maybe I'm wrong, but I think that a lot of companies were overvalued for a very long time where the money wasn't there. I think that certain companies that weren't showing a lot of profits and a lot of assets were trading at astronomical rates for a long time. And they're going to be corrected at some point. And other companies that there's a lot of assets and a lot of profit there that are trading at historically low levels are going to be corrected as well. So, these are unprecedented times. I think that, even economists are sort of stumped. I think that even the best hedge fund managers in the world are not really sure what to do, long-term, short-term, et cetera. So it's a day-by-day thing.
No, that's I appreciate it, Jaret. And I think our listeners got a lot out of this, especially from the insights of our real estate expert that was able to join us. And this is not the end. I mean, this is just the beginning of these discussions. Jaret and myself, we're going to be available to field questions, take your calls on subsequent sessions, and we're looking forward. Actually, the next podcast, Jaret, I believe we're going to look at how to be more impactful in the interaction and collaboration in this during and post COVID-19 pandemic. We're going to look at necessities and innovations that are going to come out of this. We're going to talk about, recessions being a good time to start a business, right? How can people continue to stay ahead of the curve? But most importantly, right, we're going to really dive in and look at some of the core insights around the world changing around us daily and what are the near and long-term implications. So with that said, we welcome you. We're grateful for you taking the time to listen in and talk to you on the next show. Jaret and Jason out.